My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. We'll start with the euro against the dollar. An unusual situation here yesterday. A key reversal up upon an earlier key reversal up. This is rare and unusual situation here. I've called these in the past compound key reversals up, but that's just want for a better descriptive. The market reached up as far as just short of the next overhead resistance of note, the flatlining medium moving average, currently at 120.57, before stalling its rise. Beyond that, we have the dubious neckline of the reverse head and shoulders pattern from January to February, which is currently at 121.22, and then the March 2018 low at 121.52. Meanwhile, below, we've left behind the support of the recent 50% Fibonacci line at 119.75 and the short medium moving average, currently 119.66. So far today, a further attempt higher and a move up over the medium moving average, stabilizing just over it right now. Cable, aka sterling against the US dollar. A sixth bullish white soldier yesterday. A bullish long white Mariposa and a strong follow-on to an equally strong looking key reversal up in the previous session. The market punched up through the short medium moving average, currently at 138.61, as well as the earlier April high at 139.18, and only halted at the previous congestion and March highs around 139.99. Beyond this, we have further congestions at 140.75 and 141.43. Overall, we are still within the June to September 2020 bullish shift pitchfork, with the lower time below currently at 136.92 and the middle time above currently 141.51. Please remember, this pitchfork has given the bullish angle of attack of this market since September last year. So far today, an attempt at breaching the 139.99 congestion, though limited so far and looking a little bit like an indecisive doji cross right now. Euro sterling. A third bearish black crow yesterday and a significant follow-on lower to the previous session's also significant key reversal down. The market hung on the overhead clothesline that was the resistance from April 2020 low at 86.69 and proceeded to drop down through the short medium moving average, currently 86.31, and the short moving average, currently 86.02, closing the session just above the latter. I suspect that was more due to congestion from early March than the short moving average directly. Now for the bulls out there, this is a bit of a disappointment, especially after last week's weekly key reversal. A weekly key reversal up. Additionally, this jeopardizes chances for a monthly key reversal. Now we are still on for that, but we need to close on the 30th of April either above 86.70 or below 85.10. Currently we've moved into a possible lesser outside month right now. So far today, pull back up towards the short medium moving average overhead, but stalling there it seems. US dollar against the Indian rupee. A reactionary bullish opening white Mariposa yesterday. Now I'm not sure if this is in response to moving and closing below the old 50% Fibonacci line of the February to April 2020 move at 74.26, which had halted the move lower in the previous session, or the nearby sharply rising late March based uptrend currently at 74.38. Whichever it was, it will likely become clearer in the next few days. And so far today, well, an interesting market, a lower open and another dip below the 50% Fibonacci line and move towards the uptrend. But again, pull back up through yesterday's high and possibly thinking about making a key reversal pattern today. US dollar against the Brazilian real. A fifth bearish black crow yesterday and a suitable follow-on lower from the previous session's key reversal down. But much as last Friday, there was more here than can be seen on face value. It was a first close below the combination of what looks like a very important rising short medium moving average, currently 557.12, and the lower time, currently 557.06, the recent January to March bullish shift pitchfork. Now first off, this was the first close below the short medium moving average after 4 failed attempts in the last 5 weeks. Next, it was also the first close below the lower time. Now that on its own is interesting, but not excessively. However, when taken in conjunction with the early March downtrend, currently at 573.07, they form a sideways triangle with the requisite number of touches already on the books. Can now give a potential target below, but this far down the sideways triangle leaves the market open to being a false break below. Hence, while I haven't marked target X on the downside because it has not been confirmed, I can read it to you. It's in the 541.5 area. But please be cautious about this. It is still early on in the break. And please remember, 6 out of 10 times, the break is on the top side. Additionally, being so far along the triangle, the sideways triangle, we have a high degree of false breaks and pullbacks as well, something like 60 to 70% of the time. So watch, and please watch carefully. US dollar against the Mexican peso. A 6th bearish black crow yesterday, and a continuation of the idea I raised 2 weeks ago of, and I quote, recent action also leaves the way open for a possible descending wedge, descending triangle, or even a double bottom pattern, end of quote. These ideas are now coming to fruition. We've already achieved the descending wedge pattern target. What we have now is a possibility of 2 head and shoulders tops, one from mid-January to late March, and another from late February through to early April. The first case, we have an initial target X3 in the 1971.70 area, not too far away now, with a full target X4 in the 19 even area. In the second case, we have an initial target X1 in the 19.5 area, with a full target X2 down in the 1885.5 area. This only leaves the idea of a possible double bottom, and that will depend if target X1 holds. All this depends on the market, repeat, not breaking the steep early March to date downtrend, currently at 199878. Now so far today, an initial further continuation lower, approaching target X3, but a pullback up, well into the bodies of yesterday's action and tempting the idea of a possible key reversal day today. And that's one to really watch, maybe even a bullish engulfing pattern. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.